like to hedge, but as of right now, because of who owns the majority of Bitcoin and where that money came from, it's not going to hedge very well in this recession. Welcome back, YouTube. So Michael Berry believes that we have further to go before we can see any type of correction or a bounce back. And in this video, I'm going to give you my top 3 indicators that I'm looking at right now to kind of gauge where we are in the economy, whether or not we are poised for a reversal or we have further to go. Now, as far as for crypto, the biggest indicator that I look at, of course, is obviously Bitcoin because it commands most of the market cap in the crypto space. So I look at the price action on the daily, of course, but then I also look at the history behind it, similar to what I was doing last year at the peak of the crypto bull run. Today we'll take a look at Bitcoin, obviously Dogecoin and stuff like that, but we'll see that for the most part, it's pretty flat and we're putting up a fight at the $20,000 mark for Bitcoin and as well as around the 5 cent mark for coins like Dogecoin and Ethereum. Coins like Ethereum are holding on to like that $1,000 mark. But my biggest indicator of breaking a trend is actually going to be linked to Bitcoin because historically, the indicator that I like to use is it's on a 4-year cycle, and typically we do not go below the previous high of the last cycle. We do not correct below that. And typically we'll have these corrections 80, 85%, stuff like that, but we do not correct below that. As of right now, the previous high would be around $19,300. I did pull the chart and I'm going to take a look here and show you guys. This is just a heat map here stating that we're getting some resistance here at around the 20,000 just to kind of show you all the buy orders that are filling in directly below. And this is kind of where the battleground is right now between 20,370 and 20,490. And we have massive buy orders here. That's pretty much trending to keep Bitcoin above the 20,000 mark. As this goes on, I don't know if those buy orders are going to keep filling because there is massive catalyst and downward pressure here, as you can see, building to push Bitcoin below that 20,000 mark. So we have less than roughly about $1,000 to play with before we break Bitcoin's historic 4-year pattern. I did want to show you here in the chart as well what I'm speaking of. And this is the number that I'm coming up with here for like the previous high. So the previous high before we had our major run up here, because typically we'll have the 4-year cycles, obviously. So this will take us back to around 2018. And you'll see here that the previous high before our major bull run up in 2021, well, I guess it started in like late 2020, but the previous high, we didn't break it until I won't say like roughly like 2021. Yeah, well, late 2020, December. But the previous high was around let's just say 19,300 roughly. Between 19,300 and 19,600. 19,600 was the number that I gave on my last one here. But if you want to count the wick or not, that's up to you. But typically, let's just say that range here. But either way, we're playing less than $1,000 before we break that historic 4-year pattern. If we break that pattern, what does this mean? This means that we can have pretty much another halving in Bitcoin. So this means that we can have pretty much a reversal here. And on an extreme case, this means that the floor is now open. We have some resistance at around 14,000, but this leaves the floor open that we can actually correct all the way down to like around 11,000. So this is literally going to change the dynamics of the entire crypto market if this trend is broken. That's a huge indicator that I'm looking at here, and it's not looking like we have any indication of any of the macros being fixed here within a short time frame. So this is a lot of pressure on that $20,000 mark for Bitcoin. The biggest thing in the macro that I'm looking at is obviously the curve or the flattening of the curve for inflation. We have not been in front of inflation for well over a year now. I did my timetable, I think last week, and I broke down how many times the Fed has been wrong about inflation, and this is why they can't properly gauge how to deal with it. They're always seeming to be more aggressive, but not aggressive enough. It's always reactive versus proactive. So the biggest indicator here that we're going to have is whether or not we're going to have even more fear in the market is if we miss the mark yet again and inflation beats their expectations for this current month. So when we get the numbers next month, if the CPI numbers are terrible again, this, I believe, will drive and will force the Fed to be more aggressive, and we're going to start talking about full percents, possibly even higher. And this is also going to cause Bitcoin to break down below that 20,000 mark if we have not already. This is just going to kind of have like a reset in the market or like a rebalancing to free up capital so that these companies that are over leveraged or that the ones that are panicked and not sure how long this is going to last, they're going to want to free up capital. Because when you have assets like cryptocurrency, yes, you can make money, but typically if you're not shorting it and you don't plan on selling it, it's typically not going to do anything in a down market. You're just simply holding. And historically, people typically like to hedge, but as of right now, because of who owns the majority of Bitcoin and where that money came from, it's not going to hedge very well in this recession. The third indicator, which can actually be another falling domino in the market here, I'm going to show you the chart here that I'm looking at, is actually real estate. This is pretty much the historic rates that we've seen here since well into like the 1970s. We'll see that we peaked at almost 20%, and we've actually come down, and we were pretty much dealing with historic lows, and now we have this huge reversal that's pretty much taking its course across the country because of these basis point rate hikes that are happening right now. Money is becoming more expensive. This can literally rug pull the real estate market, and then we're going to see another form of chaos, which will almost guarantee that we're going to see a prolonged bear market in the stock market and certainly lower lows in the crypto market. These are all tied together, so it's not like we have to kind of evaluate the interest rates for mortgages and stuff like that separate, because typically anytime we get a raise in rates from the Fed, we're going to ultimately see that play out almost immediately in mortgage rates. So if the CPI numbers are disastrous this month and the Fed comes out and say, hey, look, we're going to a full percent, you can certainly expect mortgage rates to increase yet again. And this is going to put a lot of pressure on the people that are selling homes. What we're going to see here, and what we're actually starting to see, is inventory start to build up in a lot of the major cities across the country, because people are watching what's going on, and nobody wants to buy a house at the peak when a bubble is about to pop and you end up being upside down for years. Nobody wants to do that. If you're in a strong enough position, you can just simply wait and buy at the bottom, or at least at a lower price. I've seen the posts going around on Reddit about people asking, oh, hey, if you buy a home and before the bubble pops, and do you still owe the money pretty much if the value of the home still goes down? And that's going to be a situation a lot of people are in. I think people kind of haven't forgotten for the most part about '08. But yeah, it's certainly possible for you to be upside down on your property for a very long time if you're not careful. And what we're going to see in response to that is inventory rising, but you're also going to see the prices of homes start getting cut so that they can unload them relatively quickly. That is also going to be another indicator here of a reversal. Before I dive back into the technicals, I just want to give you the three key items that we're looking for here: is mortgage rates, curve of the inflation with the Feds, or pretty much our CPI numbers, and if Bitcoin breaks below its previous high, that 19.3, 19.6 range. At that point, these are all indicators that we have not seen anywhere near the bottom, and there are going to be much, much greater entries on the way. This is one of the reasons why I'm always talking about patience and stuff like that, because if you can time your entries, the next bull market will take care of itself. And similar to what we can see here, even with Dogecoin, we can see Dogecoin starting to trend sideways and at around the 5 cent mark, building up some support there. And we can take a look here at the pools of liquidity with Bookmap and get an idea to see those price action and those buy orders to see if that indeed matches up. So we can see here that this does indeed match up with the price action that we're seeing for Dogecoin. We'll see that those bubbles are really, really small. So this means that there's pretty much low volume trading right now, but Dogecoin is trading directly in the pools of liquidity, right above its buy orders and right in between its sell orders as well. So this pretty much means that it's certainly just building up support, and we can kind of expect pretty much just some sideways movement here in the near future. And again, obviously, if you want access to the heat map here to see the pools of liquidity, I do have a link for Bookmap in my description section. Now, I do want to take a look here at the shorts. So you guys know I'm big on as far as our market trends and stuff like that. We're going to keep an eye here. This is actually Bitcoin short chart, and we see a consolidation out of their short positions. So, and the price is still relatively at the same level around the 20,000 mark. So at this point, I am expecting a swap, and I'm expecting them to kind of come back in and try and drive this below the actual 20,000, that support level there. We're going to have to keep an eye on that throughout the weekend. Let's take a look here at Dogecoin. We have some slight consolidation here out of the shorts in Dogecoin, but as you can see, Dogecoin shorts are obviously still to the moon, And I do not believe that they're going to consolidate to the level that even like that we just saw with Bitcoin, because at that point, the people that are simply holding this is going to kind of reveal what's going on here. So I do believe that we're going to, they may consolidate some of it and do like a swap, but I do believe that we're still going to set a trend here with the higher high for the shorts in Dogecoin. As you can see, that yellow line, that's the 21-day moving average. The blue line is the 50-day moving average. The purple line is the 72-day moving average. The red line is the 200-day moving average. And we are pretty much, if this was price action, this would be the most bullish pattern I've seen in a long time. So all this is literally just very bullish in the short term here. Pretty much just saying that the shorts are literally to the moon. That's the only green thing that you can see here for like the last few weeks. Shorts have certainly been on it. So with your indicators and your TA, this is stating that there is a strong potential that we're going to see better entries here. And we should have some answers to those questions within the next week or so to kind of get an idea of where the market's going to break down and how these support levels are going to hold up. Because I do believe that based off of the numbers and the catalyst that we're seeing here, a lot of these support levels are certainly going to be tested. And if I see that Bitcoin does a swap here with its shorts, that's certainly going to be confirmation here that they are gearing up to take Bitcoin lower, and this is ultimately going to break that 4-year cycle here. And we'll potentially have the ability to make history here within the next week or so with the biggest upset known to crypto. And at that point, we're going to have to come back in and reevaluate these floors here, because we may be positioning ourselves for the first halving of a broken cycle with Bitcoin, which will obviously affect the entire crypto market. With that being said, I hope you found value. Like this video if you did. Subscribe to the channel if you want to support the channel. It's absolutely free. It costs you nothing. It does a great deal for the channel. And plus, I'll appreciate it greatly. I appreciate all of you. Thank you. And until next time.